Good evening, folks. Late afternoon, heading into market close here, and I just wanted to do a live stream because this is the moment in the markets where we accumulate an insane amount of wealth while everyone runs around and complains like it's the end of the world. And literally, by the definition of, if there's one thing that I have not seen in short supply, is the crazy amount of whiny babies running around the market complaining about it's the Fed's fault. They're raising rates. It's Elon Musk's fault. He's on Twitter. It's like, who the heck cares? It's just this market cycle is just turning everyone into a bunch of whiners when you should just be out hustling and buying these damn dips. I bought another $1,000 worth of the S&P today. 2 days ago, I dumped $10,000 into the S&P 500. And damn it, the first of the year, I'm going to load up my TFSA. I'm going to be buying some SCHD. I'm going to be buying more VOO. And just buying the crap out of this market. It's kind of just, it's just what you should be doing if you're not caught in the calamity of, doing stupid, risky shit. Because what's happening right now is the unbelievably unwinding of stupid shit in the market. And I'm tired of people complaining about it because it was so damn necessary that not only is it setting up an opportunity of a lifetime for people looking to get into real estate for the first time, people looking to buy stocks that have been claimed to be overvalued for the last God knows how many couple of years, NFTs, all of your sports playing cards, your Nikes, your Rolexes, all of that shit is finally unwound. And there's no point complaining about it. You just want to get the hell out and start working your ass off and taking advantage of this, because in the next 1, 2, 3 years, this is going to be the moment where you're not going to be complaining. So I don't know why everyone's complaining about it. It's so funny. I like your approach, VO, on the dips. And the only reason I'm hardcore into the index funds, guys, is because you don't know what you don't know in a market cycle like this. And so many fund managers right now you're watching really underperform the market. I don't think they're going to outperform coming into next year holding the same stocks they were. Even the likes of Tesla could still see, underperformance for the next year, 2 years, depending on how bad this recession hits in auto sales, because Teslas are still generally, premium valued cars. So the first thing in a recession that people aren't going to be buying is a $50,000 Tesla. They're going to be buying, $10,000 beaters like I've been buying. But the reason you want to buy VOO is to avoid that bullshit, because VOO is going to, in a tax efficient way, consistently and continually weight the best performers to the top. So you're not going to see the same downside risk. And like I said, I only know what I know. And I know for a fact I'm not good at picking stocks in a market like this. Go look at any stock picker. Meet Kevin, Jeremy. Go look at Graham Stephan's portfolio. Go look at Andre Zhik's portfolio. Damn it, no one from Millennial Money has outperformed this market. Damn it, go look at, give me one fund manager outside of the likes of Warren Buffett, damn it, who is just buying things like Occidental Petroleum and Coca-Cola that have outperformed this freaking market, because none of them have. And now they're all shilling products like there's no tomorrow. They're all trying to convince you to buy into these hedge funds and all these different effing managed funds that are just going to continue to underperform, when all you have to do is buy a passively managed fund. Very straightforward in a market like this, and I promise you're going to come out all right. Start a position in Amazon today. If you got the balls, man, honestly, you're not. This is the time to do it. I'm looking at buying some small caps. Me and my girlfriend today were arguing about when do we start buying Tesla stock back. For right now, I am just blindly like I said, my whole goal right now is to be buying the S&P 500 when it's below 20% of its all-time high. That's why I keep telling you guys I'm not going to be buying the rallies. If the S&P is rallying and we're starting to see it get back up to that 15% low off the year, then I don't want to buy it. But now that we're back below 20% and we keep seeing these downtrends, again, aggression matters right now. I think we could still see another 10% drop in the S&P. The problem is I don't know, and I'm not going to gamble on it, but I'd rather be buying the lows than the highs. I'm not the biggest fan of JEPI, but SCHD is a saint. Like I said, I sold VOIM, doubled down on SCHD. I'm trying to concentrate my portfolio, set up the drips. I'm trying to forget about dividends. I know so many people right now see these big yields in dividend stocks, but to be honest, I think most of it's going to be a bear trap. A dividend trap, because when dividends are going up, that's not necessarily a good sign within a company, guys. Typically in markets like this, especially when you're looking at REITs and things that have crashed that have really high yields, there's a reason for it. And when you dig into the books, you're going to see that they're paying a lot more on interest. The narrowness between them paying those dividends and, not being able to is getting tighter and tighter, and you're going to see dividend cuts across the board. But I think in a market like this, you want to be paying attention to total return. That's why I'm not heavily just loading money on all these crazy dividend stocks that seem to be on discounts. I'd rather buy the broader market or something that gives me exposure to these growth stocks, because the growth stocks are what are getting hit the hardest right now. And some of them are going to surface back to the top when we come out on the other side of this. So yeah, Amazon, Google, again, even Tesla, Nvidia, these are the kind of companies that I want to see continually crashing. Yeah, they're going to bring the indexes down, But God, man, you just, the opportunity of a lifetime is presenting itself right now. And as I've preached so many damn times on this channel, man, no debt, no margin, no auto loans. Just because you're free right now. You feel the power of freedom. You feel the power of, oh my God, I earned money and I can buy whatever the hell I want. And I don't have some kind of bank coming down my throat, making it impossible to sleep at night because I had to leverage myself into an $800,000 mortgage in this crazy overhyped market, right? Is it right to buy VFV in either TFSA or RSP if I don't want to get currency conversions? Yeah, absolutely. VFV is your one-stop shop as a Canadian to not have to buy SPY or VOO, the S&P 500 in US dollar currencies, and pay the conversion. So just buy VFV. It's been outperforming this year because the US dollar's rallied so much against the Canadian dollar. But yeah, I mean, I've considered buying it even in some of my other accounts, but to avoid it, I like sticking to my VOO, but there's nothing wrong with anything between them. So again, what has cracked the camel's back here, folks? A bunch of whiny babies. I mean, take a look at this. I think this is the funniest shit ever. Every time I look at this and I keep reminding myself, this is what's crashed the market. I wouldn't even say we've really crashed that bad. I think it's just this over exaggeration of people losing their marbles is what's tanking the market. Let's be real. And there is some devastation. I mean, people are getting hit, but the interest rates, man, we're not even back to the 08 levels yet. And look at the insanity and the complaining. And why do they keep raising the interest rates? They don't need to go any higher. The Fed took too long to react to this market. They took way too long to raise rates. And now they're taking way too long to stop raising them and lower them. Why do they keep doing it? They're punishing Americans. They're punishing Canadians. They're punishing everybody by raising them. No, who are they punishing? Over-leveraged whiny babies that got greedy, that drove inflation to the moon. Honestly, I'd love to see the interest rate get up to 6, 8, or even 10%. Yeah, let the housing market fully correct. Wipe out those people that mortgage broker said was a good idea to take a variable rate. Do I feel bad for them? Absolutely, but goddamn common sense. Since the dawn of investing with Dave Ramsey and everything you've heard from Warren Buffett is don't do that stupid shit. So if you got greedy, it's just going to be a wake-up call where you might have to reset yourself financially and start working hard again and realize the reality that getting rich isn't easy. It's just a slow grind for a 20-year period. Over a 20-year period, 100% of the time, you would have never lost money owning the S&P 500 index. Over a 20-year period, you would have never lost money owning the S&P 500 index. That doesn't come with margin. That doesn't come with all this debt and bullshit. Like, it's just not rocket science here, folks. So, I mean, I just, like I said, when I can't get over the spectrum of complainers and the endless fear mongering in the market right now. So I'm buying like crazy. I'm just buying it all. I'm like, come back to me in a couple years here, and we're going to be laughing about this stupid crap. We're going to be laughing at me, Kevin. All these people, man, are just, I don't know. I can't get over it. It's just kind of unfathomable to me, really, at this point. Why do you like? I don't like Jeppy personally. You're asking Pokey. Yeah, I'm not too big. Maybe we'll pull Jeppy up here real quick because a lot of you guys are into these high yielding options plays like this premium income ETF, which actually year to date surprisingly isn't down that much. Let's take a look. See, my biggest concern with these newer ETFs, and I know this is a highly renowned one, they've been doing a pretty good job with it thus far this year, but my biggest concern with it is the lack of history. I don't like buying funds that haven't been around for, under a decade usually, but this one actually been doing pretty well. Surprisingly, plus the yield's probably absurd on it. Let's just pull it up real quick and see these high income. Yeah, so you're getting about 10.62%, expense ratio at 0.35. These are more of your retirement kind of stocks. I don't like owning them currently at my age, but if I was at retirement age, I was more concerned with cash flow. Yeah, I'd probably do a diversified portfolio of option ETFs along with bonds, GICs, now that the market's favorable for it. But personally, at this current age, time of my life, I just feel like it's a crutch. It always inevitably tends to underperform the market. And if there's not a 10-year history, you can't sit here and use this 1-year base case as an idea that, oh, this is going to work forever, because I haven't been able to find a lot of long-term options funds that have actually outperformed. I have no job and Jeppy pays my bills. So there you go. Yeah. So for you, that makes perfect sense. I don't need income right now. So I'm not like, I'm making almost $1,000 a month off my portfolio, but I don't want to care about it. I don't want to get caught in that dividend trap like PPC and all these people that think like, if you're not at retirement and your horizon's like 20 years or longer or 10 years or longer, I just don't see the point in worrying as much about income as growth. And again, those two kind of combine together. My overall portfolio yield is just around 3%. And that's the best of both worlds. Like you get your SCHDs, you get around your 3 and 4% yields with some of the dividend income, but you also get the VOO. You can look into the Qs, you can look into buying some individual stocks like Google, Amazon, now that they're getting favorable, and like you just balance it all out. So that way you're getting that closer to 8 to 10% return. Because typically you look at dividend stocks, like even these REITs, the historical returns have really been around 5 to 6%, whereas the S&P has historically been like 8 to 10% over the last decade, like 12, 13%, I think, before the dividends. And like I said, honestly, if you went back 10 years and you're like, oh, I'm just going to buy these dividend stocks, something tells me you'd sorely regret it, seeing the bull case we just experienced. But again, that comes with management, that comes with, balancing constantly and not getting caught and being like, Tesla took me to the moon, I'm going to diamond hand it, and now you've just lost 60 or 80% of those gains. Super painful stuff for people that, I don't want to beat up the Tesla shareholders too bad, because I rode that wave. Do you have concerns with the performance of the Canadian banks heading into 2023? Yes, I do. Long term, I don't, but short term, I do. They have a lot of liquidity. We just saw BMO. I talked about it today a little bit. They liquidated, they dumped shares onto us, man. The bank, the regulator said, hey, look, like your mortgages are weakening. There's just a decreasing in valued mortgages because the tightening of people's payments against like how much room they have to make that mortgage payment has been getting tighter. So the banks have to reweight the mortgages from like, AA rated loans or A minus, B minus, like they're reweighting all these. And the regulator said, hey, these loans are weak. You need more money. So BMO's like, shit. So they had to dump like, a million plus shares on the market. They had to raise like $2 or $3 billion to make sure they had liquidity. And I think they'll be fine. Long term, they'll be fine. If anything, long term, you're going to print if you can buy them on dips, because inevitably they're going to make more money off a higher interest rated environment. So it's kind of like short term pain for long term gain. This is something that the Bank of Nova Scotia talked about on their first or second Q earnings this year, because I remember listening to the call. And the CEO was just going on about how like inevitably like they're going to be printing off these higher rates because eventually things will nominalize. The real estate market will come back. People will just become normal. Everything in accounts, all that money they have stacked in people's savings account, all that money people are taking out on new mortgages, all of it will just lead to higher income for them. I hope Meat Breath goes broke. Look, I don't want to beat up Meat Kevin too bad, but I just feel bad because like he used to be that guy that was like, oh, just buy passive funds, cost average. That's what most people should do. Don't do what I'm doing, but here's what I'm doing. And then all of a sudden he's like, buy my products, buy my ETF, even though like it's not probably the most prudent thing to like over leverage into these growth stocks right now. And then the guy buys a jet. The optics just look absolutely horrendous for me, Kevin, in this market. Jesus, man. If you have to option to lump sum 6,500 TFSA 2023 or an early journey, which ETFs do you suggest? So I'm only buying 3 ETFs. My entire new idea of investing resides around 3 ETFs only for right now. And that's VOO, VDY, the Canadian Vanguard High Dividend Yield ETF, and SCHD. And when I get to deposit that 6,500, which I already have set aside, I liquidated those funds. They're just sitting in my account. January 1st, it's going to go. Well, usually I give it about a week into January because I just don't want to jump the gun and be like an early, stupid. You throw the money in, you've over contributed some bullshit. So I always give it like a week. And then I'm going to be buying primarily just VOO and SCHD because I've got like almost 150,000 right now in VDY. VDY alone makes me like 500 a month. I've got about 135,000 in VOO and about 70 to 80,000 in SCHD. So I kind of want to bring VOO and SCHD up a little bit, especially now that they're kind of suppressing back down. Yields are coming up a bit. That's my game plan anyways. And again, you don't have to buy those US stocks in your TFSA. I just like having a balance of US and CAD in my tax advantage accounts. That way, if I travel to the US, I get US income, I get my Canadian income, best of both worlds, right? But outside of that, man, it's going to be a wicked 2023. If I had to make predictions on where I think the market's going to go, I think we need a few things to happen for a true pivot to like a bottoming. Obviously, the end of raising interest rates, which I think is coming very soon. Geopolitical events cool down. We stop hearing about China going to war with Taiwan or wanting to, and all this stuff with Russia and Ukraine. That stuff starts to kind of tide over a little bit, which I think the market honestly stopped caring about it a while ago. This shit's still going on, yet I don't hear anyone talking about it in the media anymore. But I think they are true factors to inflation, commodity prices, etc. And then finally here, we kind of just need the, so what was it? Yeah, so the global events to cool down. We need to get interest rates under control. There was a third point to that. I'm trying to remember what it was. But anyways, it's because inflation's done. The inflation story's over, right? So there's no worry about inflation anymore. That would be, I guess, part of the third point. So it's just matter of the Fed really, and people starting to unwind the leverage. And as soon as we're done unwinding, we find that bottom, crypto's done, NFTs are done, all that stuff is going to start coming back. Probably, I would have to say, I don't know, 6-12 months, maybe. If I don't know. I just don't know what happens. I don't want to predict it, right? Because I just want to keep cost averaging and hope it lasts for a while, because this is where we get rich. What is your ideal geography location? Only US and Canada, 70-30 split. So I'm about 50-50 each. To be honest, you should be VTI. You should be total market index funds. Like I said, don't do what I'm doing here. I don't know, like everyone thinks what I'm doing works for them, but you got to remember, I got no liabilities. I got no kids, no car debt. I got like no living expenses. I don't own a house. I don't have a mortgage. I'm basically just paying rent, and a lot less because I'm living between like a bunch of different places, and I'm just helping my parents out by helping, pay them some money and stuff for when I am living there, the couple, maybe one day a week that I'm there. But nonetheless, like I said, you got to kind of figure out what works for your risk tolerance, because what I do works for me. And I like Canada and the US. I don't like China exposure. I don't like Europe, even though I like some of those stocks. Like I like BABA, I like Hershey's, I like those foreign companies. But just for my risk tolerance, I just like Canada and the US. I understand these economies. I feel I get enough diversity. A lot of people ream me out saying you don't get global diversity buying those kind of stocks. But I'm like, McDonald's is global. Apple sells globally. Pepsi sells globally. I don't know why you keep saying that. Like Philip Morris sells globally. All of these US companies are globalized companies. Like a vast majority of the revenue comes from other countries. I don't know why I have to be directly exposed to the China BS or directly exposed to the European insanity that's going on with the geopolitical events. So for me personally, like I said, 50-50 split usually between Canada and the US. I'm very happy with that and sleep very easy at night. When do you foresee inflation? It's already there. Well, technically, I think if you go from July, it's at like 3%, 3.5% or 4%. But I think inflation's back to a nominal rate. I think we're there. We just got to wait for it to roll over. I think that was one of the biggest things that people have a problem understanding is, let me show you month over month inflation. What people don't understand, man, is inflation's been done for a while. The Fed is just pressuring the market for fun because they do everything on a 12-month trailing period, but they're not stupid. They want this to last a while. They want everything to nominalize as much as possible before they stop raising rates. This is the month-over-month inflation data. You do the math. From July, inflation was 0. August 0.1. You come all the way through. We had 2 months of 0.4, and now we're back to 0.1 for November. I'm like, inflation's done. We're not seeing 1 point raises month over month. All of this is over. It's just going to take 12 months for it to fully trail over, because inflation's calculated on a 12-month trailing basis. So I don't even know why this is a conversation anymore, because everybody knows this. I mean, oil's dead. I mean, you think the biggest risk you have right now is probably being heavily exposed to oil stocks. This is one of the reasons that I actually sold VYM, was because I was a little bit concerned about the oil prices here. Actually, let me just look up. You take a look at this, right? Can you guys see this here? Let me zoom this out. Look at this fall off. We're back now below the geopolitical event that took place when oil prices went to the moon, right? So, I mean, inevitably, we're not going to see all-time high revenues coming out of ExxonMobil for Q1 of next year. There's just no way. So I just don't think we're going to be seeing these crazy high-flying oil stocks like they've been doing. I think that run is slowly coming to an end. But again, it's good because it means inflation is dead. Only idiots would buy stocks right now. This is why I buy stocks right now. This is why I love buying stocks right now, because when everyone's telling me not to buy stocks, historically, that has been the best time to buy stocks, especially if you're going to be in the market for 10 or 20 years. This is what I love. Go on CNBC right now. You can't buy stocks. The S&P is going to 300. That may be true. That may not be true. Nobody actually knows. If they knew, they would have told you to sell the tops. Why would, a lot of people knew the market were like getting crazy overvalued. Personally, I didn't know where the markets were going. I made some bad decisions and had to adjust. I lost some money in the downturn, but I adjusted quickly and it paid off well. But when everyone's telling me one thing, I'd rather do the opposite. How do you think I got so wealthy in the markets? Because I bought Tesla stock in 2019 when everyone said it was overvalued. I bought crazy companies that, just like Canopy before the legalization of the MJ market. When everyone said, why would you buy these highly speculative stocks? Because it's stuff, but everyone's telling you something different. You'll never get rich in this market if everyone's telling you to do something. It's the exact opposite is when you get rich. I'm telling you, baby, buy stocks right now. Buy it whenever you can on every damn dip. Get into some broad-based index funds. Maybe pick a handful of your favorite growth stocks and just keep buying it at every opportunity right now. This is the opportunity today. Could be better tomorrow. The problem is you don't know, but the opportunity is here now. And these things are things we haven't seen. These stocks have rolled back by 5 years. We're stepping into a time machine. from 5 years ago. And everyone's saying, don't do it. Don't pull the trigger. Don't buy stocks. Typically, the market's bottom 6 months into a recession, not before the recession. Yeah, that's like a lot of the historical stuff is interesting. Like typically when the Fed pivots or like, as soon as jobs markets go through the roof, like unemployment goes through the roof, that's when the market is bottomed. I did a bit of a video on that, like these weird indicators. But again, that's probably going to happen. I mean, like I said, I think the market's going to keep going down. I'm not saying this is the bottom and don't buy. I mean, I think this is a good opportunity to keep buying. And if it keeps going down, I'm going to keep buying. I don't think it's the bottom personally, but I'm not going to gamble on that. Who the hell knows, right? Oil is dead, my friend. SPR releases is ending Russia embargo. OPEC is no more spare capacity. Inventories are falling. Again, I don't know the oil market well enough. I just think it's very cyclical. And I do think oil is just not going to see obviously the numbers one for one are not the same as they were. Thoughts on materials such as copper? Copper prices has kind of fallen off too, hasn't it? Let's just take a look at the commodity prices real quick, and I'm going to get out of here. Copper price. Commodities, I think there's still a lot of money. Gold, I think, has been going up quite a bit. Gold is proving to be a relative safe haven. It looks like copper's kind of fallen off. Can I share this? Move my head out of the way real quick. Yeah, so copper isn't doing too. Let me zoom out. That's the 1 day, 5 year. Yeah, copper's still up on a 5 year basis, 10-year basis. It's still at a 10-year high. Copper looks like it's in a great place right now. I mean, take a look at some of these. There's copper, like gold and silver. Gold's holding almost 1,800 an ounce. Natural gas, I think, has been pulling back. Silver is doing pretty good at 23. Soybeans, wheat, all the big commodities have crashed. So everything related to inflation is coming down. Iron ore has fallen off a cliff. I think iron's back down to it's still up quite a bit over the last, several years, but it's way off these friggin' crazy highs. I mean, the markets are done, man. We're done with inflation. Commodities are direct correlation with inflation. Yeah. Do you and Leor Gaunt's mining companies, do you own, and Leor Gauntz. Sorry, Leor Gauntz is this like millionaire dude I work with that runs a big company that I had some correlations with, and he's really big into some of the mining companies. I think mining companies are at a good value. They're just not really my play, and I get exposure to them through the indexes. VDY has a lot of gold companies like Barrick in there. Have you looked at lumber lately? Yeah, lumber has also been falling off a cliff, is it not? I mean, lumber is tanked. So the crazy thing about lumber, and I'll tell you a fun little story right now. Everybody that was in pre-construction is about to get wrecked because of lumber. I mean, you look at the lumber prices over the last year, any pre-construction building homes through this cycle overpaid for materials by leaps and bounds. Now, all of a sudden, that house isn't worth what they sold it for a year ago. And now all of a sudden, people are faltering on not being able to come up with what the bank demands. Because if the house price corrects, the bank asks for more money. Those people don't have more money. They can't get approved for the mortgage. And now this construction builders stuck with homes that aren't worth what they were, and they overpaid to build them. You learn to trade options. Yeah, options are pretty good if you're good with it. Everyone's saying sell September 2008. We're right at the short, at least the short term. Saying I don't know. It's so dumb. Inflation only based on the year prior when it's already super high. We need deflation to get back to normal. Anyways, guys, I could ramble here. I feel like I'm starting to talk in circles. I appreciate you guys all coming out. Let's just see how the markets are closing out. I just wanted to come in just to see how we finish today because it's so devastating. And we're heading into the holiday season. So I feel like a lot of people are experiencing a crap ton of pain right now. But the people, again, that are experiencing the pain are typically the people that were more leveraged than they should have been. So it's a shame. I feel bad for them. My parents, I have a lot of personal family. Like I said, I may talk and act cocky about this stuff. Like I know what I'm doing, but I have experienced this, and with my family especially. Like we've seen the full brunt of this crash. We've lost an incredible amount of money through this. Like I said, for legal reasons, I'm not ready to talk about it yet. But just taking a look, it looks like Tesla's going to bottom out around 125, down 8% on the day. If this thing gets into the 100s or lower, my God, VOO is like recovered so much. So I bought VOO another 1,000, like literally at around 1 o'clock today. So it looks like I caught the bottoms today, or right around the bottoms. Not that I care. Like I said, if it drops again, I'll buy more. I don't give a shit. SCHD is rebounding. I wish I could have bought more of that today, but unfortunately, those are in my retirement accounts. So I can't really buy it outside of those for tax reasons. QQQM, look at the rebound here. Like I said, who knows if it lasts, but I'll pass that question off to you. Are you guys buying? You don't know. Just look at the chart. Market was bleeding red for 6 months. You guys are going on. Can you suggest getting, oh my God. All right. So I'm going to leave it here, guys, before we start getting into the rants and the crazy people and everyone arguing about what's right and what's wrong. The only thing that's right is don't have leverage. Don't buy stupid shit. Just save your money and keep buying the markets. Now is the time to do it. Again, we've all been in the markets for the last 2 years, but damn it, I hope you guys are hustling and taking advantage of this. I promise you, if you do what I'm telling you right now, in 3 to 5 years, come back to me. It might not even take that long. You're going to be like, damn, we did very well. Everything Money is confident that Tesla, everything Money is confident on everything they do, and they lose a lot of money. Everything Money is all about day trading and buying value stocks that continue to drop aggressively. And we'll see if they're wrong or they're right, but I hate value investing. Everybody knows. They even say the same thing, damn it. Everybody that knows the bottom of their heart and their soul is buy broad-based passive ETFs. The vast majority of your portfolio, broad-based passive ETFs over a long period of time, it's damn near impossible to lose money. Tesla might not go to $50 a share. It very well may not. It very well may. They're confident on everything and they're wrong on about almost all of it. So just keep that in mind. But stay cool, stay awesome, folks. And as always, I'll catch you in the next one.